I would say talking about secondary locations in the Dutch market, it's quite difficult today to really look at for the investors from the German side. Knowing our investors quite well, they would go for prime location in the Dutch market if the building is okay. Yes, secondary location, to be a very special case that we really go for it in the current environment. I think then it's still too much to discuss with the investors about. You see some better opportunities in other European markets out there where we have maybe also a little bit of a more local presence than in the Dutch market.
Okay, so actually having local expertise on the ground is part of an issue, because to go into those secondary markets, you've really got to have that detailed knowledge.
For going for secondary locations, it will be definitely the point that we need more local presence to go for that.
Okay, good. Dick, yes. One.
As we discussed earlier, you also see other private equity investors who are looking for these secondary locations. Is it right, Marcus, that the German investors are more are looking for less risk than the UK investors and the other private equity investors?
I would say so, yes. I think they're looking more for the running yield. They have more the running yield view. They need their distribution from the first year of investment, and not like a typical UK or US based investor. They have more an IR view, long-term view, where they look for capital growth maybe in 3-4 years time, which is a lot of the investors, at least that we represent. They're looking for the running yield from year one on. Capital growth, if it's coming, it's nice, but it has to have a decent current yield, and that's the main problem with if you look for secondary, you have to put in some asset management, some refurbishment, some upgrading or repositioning. That's something. There are German investors doing it, but they are very rarely found. It's not the general case that they are doing that.